Hi, it's Mortgage Wise with Mike Wise at Capstone Direct Mortgage, and today we're going to be talking about closing costs, breaking them down and going into detail with them. So hold on and here we go. So with all borrowers, we have a pre-purchase review process where we go over all of the closing costs that you might incur in the mortgage transaction or in the loan process. So when you close your loan, you're going to know exactly pretty close to what you're going to have to come in with cash to close. And that cash to close is not just your down payment. It has closing costs. Those closing costs are things that we're going to go over right now. So what are they and who charges them? So for instance, the lender is me in this process. We have an underwriting fee. Some other lenders might have a processing fee, a messenger fee, a wire fee, all those different fees they may have, flood insurance, policy, etc. But at Capstone, we just have one underwriting fee that we charge. There may be an origination fee depending on what rate you charge. And that could increase your closing costs quite a bit depending on what that is. So for instance, if we were to buy down an interest rate and charge a 1% or 1 point origination fee, that's 1% of your loan amount. So if it was a $500,000 loan, it would be a $5,000 fee. So that increases it quite a bit. And so we have to watch interest rates to see where they go as far as that fee is concerned and if we're going to charge that to you or not. The second thing is going to be your escrow, closing agent, or attorney. And so they charge fees that are for services rendered in their area. So those services might be just the closing fee. It might be an escrow fee. It might be a wire fee, it might be a notary fee, things that have to go on with their process and they have to cover their costs. So the closing fee is their fee, and then most of the rest of them are for services that they have to go out for and charge. You're going to pay a title insurance fee. So that title insurance is a fee that makes sure that your property lines are covered, that there's no extra liens on the property, but that will cover, that's the insurance that you're gonna pay for. That's a one-time fee that you're gonna be charged on your loan at closing. Then there's gonna be an appraiser. So you're gonna have to pay for an appraisal fee. And that appraisal fee generally ranges anywhere from $500 to $1,000, and sometimes in more rural areas it might be a little bit more. But that appraiser needs to go out and look at the property and make sure that the value is sufficient for the loan that we're giving to you. In addition to the services rendered, you're going to be paying prepaid interest. What is prepaid interest? Prepaid interest is once we wire or close your loan, let's say we closed on the 15th of the month, you're going to pay us interest from the 15th of the month to the end of the month, so the 30th or 31st, depending on the month. And then you won't have a mortgage payment for another 30 days beyond that. So you have to pay us interest from the day we close that loan to the end of the month. Also, we have to pay for a 1-year home insurance policy. That's a fire insurance. So in case you have a fire at your house, we want to make sure that you are insured so that we can build back your property and get it to the value that we need in order to have a sufficient loan on your property. So we require that you have homeowners insurance. At closing on a purchase transaction, we will make sure that you pay for 1 year up front. That ranges anywhere from $600 to $3,000 on a really, really expensive property. But normally you're going to be anywhere from $750 to $1,000 for that premium. Along with that is an escrow account. And you can go see our video on escrow or impounds. That'll tell you a lot more about what we are doing here. But if you want to make sure that you pay your taxes and insurance each month with your mortgage payment, then we're going to collect money and put it into an escrow account so that there's enough money there when those items are due. We will pay for those items from the escrow account that you've set up. So the moral of the story is that we try and get the closing cost as close to as possible accurate so that you know when you go and put an offer on a house, you understand how much money you're going to need to close that transaction. And it's super important because we don't want to get to you bought the property and now we're give you all these closing costs and you're like, I don't have enough money to close, or why is it costing you way more than just the 20% down payment or the 5% down payment? So there's all these extra fees, and generally speaking, it's anywhere from 1 to 2% of your purchase price that you're gonna see in closing costs. So if you have a $700,000 purchase price, it's going to be between $7,000 to $10,000, $12,000 for those additional closing costs. This is Mortgage Wise with Mike Wise at Capstone Direct, and you can go to our YouTube channel. We have plenty of other videos education-wise that you can review. Or if you have any questions, please feel free to reach out to us and give us a call, and we'd be more than happy to answer any questions that you have. Thanks a lot, and we'll see you next time.